Welcome to the digital space where ideas interface with crypto equalizers in the metaverse race. Thanks to Third Academy for hosting our virtual space where Crypto Rican Queen and Money Talks embrace. We're diving deep where the cryptic coin stands, breaking down barriers, giving knowledge a chance. Hello to our viewers from YouTube to the social stands. Strap in for a ride as we give crypto a glance. Remember, this ain't financial advice, right?
Friday, everyone. It's a pleasure to be here as always, hosting this podcast along with Third Academy and Crypto Rican Queen. So we're gonna dive in today into getting into crypto assets. But of course, first things first, we will always tell you to do your own research. Um, if you like, you can also consult a financial advisor. Before getting into cryptocurrencies, it is important to take several steps to understand the market risks, the necessary precautions, and we're going to give you today a little bit of the crucial steps. Again, we're going to always reiterate this because, again, you have to be well educated before you go into any kind of investments.
That's right. That's right. And so, education, like Money Talk stated, is where everything starts. Education will make you money or will lose you money. Believe me. And once you're educated, it might be carelessness or So again, pay attention to what you do and keep yourself updated because we're in a space where information is flying fast. And so understand the basics of blockchain technology is ultra important before you get into crypto, how cryptocurrency work, the various types of cryptocurrencies, and the potential risks involved in investing in this volatile market. A market that changes every second of the day, 24/7. So there are numerous online resources, courses, and articles available to help you learn. And you can always, contact us in TikTok and across social media as the Crypto Rican Queen or Money Talks for more on that.
Absolutely. And along with educating yourself, it's not only just taking one course one time or reading one article one time. The
Mm-hmm.
that the news is constantly updating and the markets are updating every single day, you have to keep on updating the education as well. So continuing to do research, your due diligence, investigating every cryptocurrency that you would like to invest in and learn about their purpose. And some of the things that might help you is reading their white papers, understanding the technology of each coin or token, and assessing their potential growth and their potential adoption. Because at the end of the day, what's going to drive this market is really the adoption and becoming mainstream. And also considering other factors like the use cases, the team behind the project, like who's working for that project, where have they worked before, do they have a good reputation in the industry, and following like the bigger market makers and also the bigger brokers and bigger players in the industry like Bloomberg, BlackRock. Also, Grayscale is another as big digital asset manager. So once you start learning how to follow all these people and always keep on reading on what's going on with that project and consistently paying attention, because what people always assume is that because a project is good right now, it's going to always be good, and that can always
Mm,
change depending on the team behind the project. If a deal went bad, if something came up about the project in regards to one of the team members and things like that. So always be mindful and keep updated with that information.
and that actually, just to give it two examples on that thing, what Money Talk stated is that, for example, yesterday, Sam Bankman-Fried was found guilty of 7 counts of fraud for the FTX scandal, right? So again, if you are new into the space and you see the coin of FTX, FTT, a lot of people are still buying that thing because they don't know, right? So it is an example of why is it important to keep yourself updated, right? And so we're going to go a little bit into research and due diligence, which is another thing. um, that actually protects the person when they're doing anything, investigating different cryptocurrencies and their purposes, um, understand the technology behind each coin or token, and assess their potential for growth and adoption. Consider factors like use cases, the team behind the project, market trends, and the problem is aimed to solve. It's interesting that we always say consider the factor like who's the team behind the project, because out of all the projects, 99%, 99.9%, we know who created the projects. Well, not 99, but at least more than half, right? But then we still don't know who created Bitcoin. But that's another subject for another time, right? When he talks.
Absolutely. And another thing that you have to do is also assess the risk. Um, Sometimes people come into these markets during a bull market. 2024 and 2025, you're going to see how a lot of new people are going to be diving into this market, not because they're learning about it, but because they see that the prices are increasing, and you're going to see a lot of coverage with, especially when Bitcoin start exploding again. And a lot of people that are new to the space will go ahead and buy the asset at a very, very high price. While everyone that has been in the space for a while knows that during the bull markets, this is when you, during the bear markets, this is when you build your portfolio. This is where you build, your community, your projects, your companies. Like all the companies in the crypto space are right now building and preparing for that bull market. So the people that are buying the assets now at a lower price definitely see the benefits. But those people that are getting in and didn't do that risk assessment are going to buy when it's very volatile. And then they're going to see a massive drop because they were new to the community and
Hmm.
the industry. So it is very important to assess your risk tolerance to determine the amount of money that you are willing to lose and that you are willing to invest, and also seeing how it can impact your financial stability. One of the things that we always say is only invest where you can afford to lose. And
Hmm.
another thing that a lot of investors will tell you is only invest about 10% of your income, 20% or more if you're a little bit more aggressive. And also, it depends on your age and different variables. But it is also important to know when is a good time to buy and when is a good time to hold and accumulate the buying power. So once you see that the markets start being more volatile towards the upside, that's a time for you to wait on the stand line and just accumulate that buying power. So when there's another good entry point, you can go ahead and again assess how much you're willing to pay for the asset and how much you're willing to invest for the asset as well.
Exactly. And that's very, very, very important, because like Monitor said, most of the time, most people come in a bull market. So what happened to me, I thought I was coming in the right time again because I just threw myself in there. Most people don't even think about getting into the space; they just get into the space without knowing anything. That's what happened to me. And then I saw my portfolio go down 75% when the bear market went down. Bear market was in happening, and so I'm like, oh wow. Um, so that's another thing. Remember, the markets go down and up all the time. That's how we can make money in this space. But the point of exit is when you lose or you gain money. So as long as if your portfolio is 75% down, as long as you don't get out, meaning you don't sell, you don't lose. Okay. So before another thing that is very ultra important is to choose a reputable exchange. As we've seen, a lot of the exchanges have gone down. We had a lot of exchanges like FTX go down. We have projects like Terra Luna go down, Celsius, BlockFi. I mean, we can actually tell you how many things just went bankrupt, right? And so a lot of people lost money. I lost money in Celsius, um, as an example, but thank God I was able to take most of my money out before the loss. So choosing a reputable exchange is ultra important because select a reliable cryptocurrency exchange platform that suits your needs. Ensure it has a robust security measures in place to safeguard your investments. Popular exchanges include Coinbase, Binance, Kraken, and others. Research each platform to find the one that aligns with your requirements. Remember, not all exchanges are available in each state or country. Now, out of all the exchanges that we mentioned here, the only one that I know that is IPO'd, right, that is Coinbase, and so they have to keep their financial records. They have to post their financial records. So I think that's, I mean, out of not that you can 100% trust in an exchange, right? But out of all the ones, that one is actually one that it seems to be pretty strong. Um, right, Money Talks?
Absolutely. And this is one that I will always reiterate that it is, listed in the New York Stock Exchange. And again, is the only one out of all the cryptocurrency exchanges, which there's over 500 right now. So you have to be very, very mindful with what exchange you use and making sure that, they are complying with regulations and everything that's coming up with cryptocurrencies. Because if not, you're gonna have a fallout like FTX. And there's a lot of, as the space continues to grow, you will see more fraudulent exchanges. So you have to be very, very
Mm-hmm.
and do the research on the exchange as well.
Okay. So, well, I'm gonna go a little bit further here and talk about how to set up your Coinbase account. Because again, it's important to know how to do this. And the first thing that I will do before I sign up into a Coinbase account is to sign up for an encrypted email, like ProtonMail. Why is that? Because you're dealing with money. It's not like anything else that you're dealing with, right? um, okay. Um, so an encrypted email is almost impossible to hack, right? An encrypted email is impossible to hack. Oh, So basically, you create this email, and that's the email you're going to use to sign up for any exchange. Okay. So when you create that email in ProtonMail, then you can use that. Let's say that you got go and have crypto at protonmail.com. That's your email. So now you can go and then sign up to Coinbase, preferably using a referral link so that you can get some free crypto. So go to the Coinbase website or download the Coinbase app, create an account by providing your email address and creating a password. Okay? Take it over, Money Talks.
And once you go ahead and you log in, you're gonna have to KYC. This is when they ask you to go ahead and submit your ID or your passport. This is just to verify that you are who you say you are. This is kind of like one of the methods that the banks are using, part of that regulation that they have been implementing. And then you also have to go ahead and link your payment method. Most likely going to be via Plaid. Plaid is one of the
Mhm.
companies that go ahead and has a partnership with Coinbase to connect your bank with the Coinbase platform. And from there, it's going to ask you to do two-factor authentication, whether you're using an authenticator app, your mobile number, your email, etc. Um, After that, I would suggest for you guys to go ahead and do the learning videos that Coinbase have. It will give you the ability to learn about certain currencies and what their use cases are. And you also will be able to earn some free crypto. Coinbase has lately been doing a lot of freebies and a lot of raffles and stakes just to kind of like draw more users into the platform. So they always have fun things for you to participate in. And then you have the ability to go ahead and start buying crypto. The one thing I will say, there's two ways that you can buy crypto on Coinbase. You can use the regular trade, or you can use advanced trader. I would suggest using the advanced trader feature because it gives you the ability to buy the same cryptocurrencies at a lower fee. And not only that, but it also gives you the ability to set a price that you're willing to pay for the cryptocurrency so you can go ahead and process that purchase. If you only use the advanced, the trade portion, fee starts about $1.99, sometimes 99 cents, depending on the cryptocurrency. And on top of that, you buy it right at the market price. You don't have the ability to set what price you're willing to pay for, which is called a limit buy. So those are some of the pointers that I will give you. And always try to look at the charts to see, if the asset has been at a lower price during that week or during that month, and whether or not you should wait to buy the asset so you can maximize your funds.
Yes. Usually, a lot of people talk about dollar cost averaging, which is basically making recurrent buys of a specific crypto or asset. Let's say $1 every day of Bitcoin, or $10 every week of Bitcoin. And that's okay, but again, it's not the best way to buy the crypto for the cheapest, because the point is to buy low and sell high, right? Buy low and sell high. So limit orders are where it's at. Coinbase One is one of the services they have in there. That's what I use to do all my trades in Coinbase, because there's not only fees in trading, there's also fees when you buy crypto and when you send crypto, and so that actually lowers the fees to the basically to the best. So one place that I use to decide what I'm going to buy, right, instead of doing dollar cost averaging, to go to cryptobubbles.net. Cryptobubbles.net, you're going to see a bunch of bubbles, okay? There's green bubbles, there's red bubbles. If it's green, it means it went up. If it's red, it means it went down, right? Then you can go down in an area where there's a lot of different, it says hour, day, week, month, and year, and then click on year, right? And now you can see until you see the red. I can see that Onyx coin is 98% down. That's the stuff that I will buy. I know what is good already, and you do the research if you don't know the coin. Aurora is another one in Coinbase that is 88% down. So you could set up a dollar cost average, but then do it in a way that is you're actually taking you buying negative stuff, right? Anything that is negative 10% or higher, you can buy that. So whenever the market goes up, you're gonna see an increase. You're not gonna see that your whole portfolio is gonna go down. That's what happened to me. And then when people end up losing money or getting out of the space because of lack of knowledge. So remember, cryptobubbles.net is a great resource. You can actually see the things for top 10, top 100 coins. You can see the exchanges: Binance, KuCoin, Bybit, OKX, Mexi, Get.io, and Coinbase. Or you can choose a favorite coins, a watch list, and a block list, so that you can monitor what is happening in the space there.
Another thing too that you can do is use different platforms, like Coinbase and CoinGecko, CoinMarketCap, and you can go ahead and set up watch list, and it'll automatically notify you when a coin or asset has hit a certain price, and then from there you can go ahead and buy that asset again. So there's different ways that you can go ahead get these notifications. Because we all know we all have busy lives, and unless you're a day trader, you are not really going to be paying attention to the markets. Um, as much as you would as a day trader does. So these are some of the things that can help you, because you can get a notification on your phone, and or if you already know what price you're willing to pay for the asset, you can go ahead and set that limit buy. As soon as that that as it hits the limit price that you indicated, the platform that you're using to purchase it will automatically trigger that. And this is something we always mention. It works the same for stocks and cryptocurrencies as far as
Mm-hmm.
limit buys, and not only limit buys, but limit sales. So, for example, a lot of people are predicting that Bitcoin will hit um, 150K between 2024 and 2025. So the people that truly believe that in their hearts, they can go ahead and set a limit sale and say, when Bitcoin hits 150,000, sell all of my Bitcoin or sell half or whatever exit strategy they have planned based on their own personal finances.
Exactly. There's a lot of things that you can do in the space to actually make make the most out of your money. And I mean, seriously, guys, there's so much opportunity. Um, and like Money Talk said, you can actually apply these things that we're talking to you in the stock. This is how when I had my first month in the stock market, I had a 250% um, ROI, and I was just new in the stock market, right? Um, without options. How good is that, Money Talks?
And again, that's an example of knowing when to get into the market. So, if you guys remember last year, right after the political elections, I believe they were on November 8th, if I'm correct. So the day right after the elections, the market dropped. I think that's the day that Bitcoin hit 15,000, and whoever got in that day and waited till like January, February of this year,
Hmm.
saw anywhere from 200 to 500% just because the prices were so low. Um, some of these assets like Bitcoin, I mean, right now it's 35,000. During that time it was 15,000. So whoever got in, whether it was $5, $10, whatever amount they put in, they automatically have 2x their investment. And that's one of the things that as you learn this market, you go ahead and get more familiar with.
And actually, thank you for mentioning that about uh, partial, right? You don't have to buy a full blown Bitcoin to make money. A lot of people think that you have to buy a whole Bitcoin. No, no, no. If you buy $100 when Bitcoin is 15K, right? And then Bitcoin goes to 35K, you can make some money. Now it's not the same as trying to get into some of the coins that are new that are low cap. That's another thing. There's market cap, basically the coins that have the most money, and ultra important to go to coin market cap or to any of these places and look at the order of these coins, right? Bitcoin is the first one, Ethereum is the second one, right? I think USDT is the third. So again, we know where people are putting the most money. The bigger the market cap, when it goes up, you don't make as much money as lower market cap, which are mostly coins that are under the thousand, thousand and the number thousand or more, which are newer. So yeah, buying partial coins, and depending on how much you're willing to risk, manage. Because some other coins that are new are just kind of like an in and out type of thing, right? So again, going back to setting limits orders and buy orders and all that stuff is ultra important, because if you can be monitoring things all the time, then you can actually take advantage and buy the low and sell the high, and make money, right?
Absolutely. And one of the things to also consider is because a lot of people forget about this, it's not so much about how much you're putting in every week. You got to remember that everyone's financial situation is different. I know sometimes in this space you start hearing, oh, I'm putting X, Y, and Z, I'm doing X, Y, and Z, and you might feel a little bit behind, or you might feel that you're not doing enough. But again, it's finding ways to making sure that whether whatever your financial situation might be, that whatever little you have, you're contributing towards your financial, essentially towards whatever type of financial freedom you consider. Because my financial freedom might not be the same as your financial freedom because of our visions. So it's always good to keep in mind, even if it's $1 a week that you can afford to invest, that's $1 a week that you're contributing towards your future.
Mm-hmm.
Might be more than what others are doing because they might not even be thinking about investing. So that alone will put you ahead of the game. I mean, just being in the industry alone right now, think about it. Bitcoin, we just celebrated the 15 years from the white paper, which was
Mm-hmm.
on 31st. Until this day, there's 95% of the global population. We're talking about billions of people that still don't know about Bitcoin. So just being in this space, and this is something I will always reiterate, just being in this space right now, you're so much ahead of everyone else. Knowing about the metaverse, knowing about AI,
Mm-hmm.
cryptocurrencies, the use cases, all of these things, there's people in the world today, just to give you a little bit of perspective, that don't even have a cell phone or know how to use a cell phone. And the cell phone was invented decades ago. So it's going to be the same with the space. However, the difference here is that more people are getting educated on it. And not only is it a technology that it's inevitable, but it's a technology that if you come in as a builder, as an investor, as a creator, you will definitely see how 10, 15 years from now, your life is going to be like 360 just because you decided to join this industry at this point in time.
Exactly, exactly. So basically, bear markets, low markets is when people are actually tested and made off. And let's reiterate what Money Talk say. It doesn't take that much money in a bear market to be able to get to see the results in a bull market. I mean, think about it. $1 a day, right, is $30 in a month, right? Most people complain that they don't have money. And I have to say this 1,000 times. It's how you manage your money and how you manage your time that makes you poor or not, or whatever you want to be, right? So are willing to, if you want to go somewhere, you need to be willing to make sacrifices. So $30 in a month, right? As an example, it's like a couple of cups of coffee. And most people go to Starbucks and spend 6 5 6 bucks every time they go there. That's, pay attention to how you spend your money, because most of the time you are your worst enemy. And I know that because I mean it's pretty easy. Go look at your bank account and start looking at where you're spending, and start buying assets instead of buying liabilities. Assets put money in your pocket, liabilities take money from your pocket. So you're just buying liabilities all the time, you'll always be you'll be the same in the next 10 years. Okay. Does anybody have any questions, guys?
Yeah, there.
Not yet.
Uh, Maybe I can start. Um, Stocks are based on the performance of companies. Bonds
Mm-hmm.
are based on the sentiment about the overall economy. And if you buy mutual funds, which are a basket of stocks and bonds, what is crypto based on other than trade and sentiment about that particular coin?
Did anybody understand the question? Because you were kind of like cutting off. So are you asking what is moving crypto?
Well,
Why it goes up and down, basically? Did I get
sorry
that?
about Mike. Why other things have some underlying basis for value? What is underlying value of some of these crypto?
Oh, okay. Yes, it's supply and demand, basically. The Bitcoin goes up when people put money. And this is basically the same principle. Yes, it's not a stock, but when people put money, the price goes up. When people take money, the price goes down. Basically, right? Money talks.
I will also say it's right now it's the adoption, the use cases,
Mm-hmm.
institutional backing. You're gonna see right now there's many more institutional backing when it comes to Bitcoin. There's actually a lot of rumor in social media that eventually the common everyday person is not going to be able to buy Bitcoin anymore
Mm-hmm.
because if this ETFs are approved, you're going to have all the asset managers barging into Bitcoin the same way that MicroStrategy is buying Bitcoin. So eventually, the average everyday person is not going to have the ability. And one of the things that I like to reiterate is that the amount of Bitcoin in circulation in the market is not really the amount of Bitcoin that is in actuality in circulation. The reason being because 18.5 have been lost due to C phrases and things like that. So when you look at the amount that is yet to be created, which is 1.5, and the total when you take away 21 million minus 18.5 that are lost, you only have about 2.5 million left, and 1.5 is yet to be created. So you're looking about, in reality, about 1 million Bitcoin. And you got to remember, there's 8 billion people in the world. So what's going to happen when 8 million
Mm-hmm.
people decide, I want a Bitcoin? The
It's
price
gonna be
is
too late.
naturally drive up. But here's the thing, before that even happens, if the ETFs are approved, you're going to have all these big asset managers and institutional money going into Bitcoin the same way that MicroStrategy has been buying Bitcoin. They actually bought more Bitcoin this week, and I believe the figures now is over $5 million that they have. Um, so those are things, those are numbers that people really have to think about. Here's the number. So he bought 155 more Bitcoin, and now the his investment is $5.3 million. So these are things that people definitely have to start thinking about because it's gonna be a point where there's people that I know that heard about Bitcoin in 2012 and they never got in and now they regret it. The people that were telling them to buy Bitcoin back then are now working for Coinbase, CoinMarketCap, CoinDesk, Binance, all these companies because they got educated early on. They learned about the asset, and just that personal self interest is what these cryptocurrency companies are looking for. And that personal interest alone, not only does it benefit you as an investor, but also as a professional that is looking to get into the space. And just to give you a little bit of data, because we were talking about, you know, people build during the bear markets, not only their portfolio, but also their companies. Bitcoin was built during a bear market in 2009. Coinbase was built during a bear market in 2012. Ethereum was built during a bear market in 2015. And Uniswap, which is one of the biggest DeFi platforms, was built in 2018, as well as OpenSea, which is one of the biggest markets for the NFTs.
Mm-hmm.
So, right now, 2022, 2023, we went through a bear market, we are going through a bear market, and you're gonna see many new companies forming from this bear market that are gonna become as big as Coinbase, Uniswap, and OpenSea.
Right.
Mm-hmm.
Thank you.
Exactly. Exactly. So that did that answer the question, Mike?
Yes, yes, it did.
I have a
Okay. So
question.
yes.
Mike, did you want to say something?
No, no.
Okay. Yeah, my question is, if you when starting out, is there an amount, an ideal amount, when considering investing in crypto?
No, because again, it depends on your budget. But I wanted to, Paige wasn't here before, and we were talking about like doing some kind of mall thing, like where for the people that were interested, like example, like since we are talking about how to buy cryptocurrencies, to like do like $100 or something like that, and see how your pot grows in the next 2 weeks. So when we come back in the next 2 weeks, then you can be like, oh, look what happened with this, right? So I don't know who was interested in that, because again, it depends on everybody's financial, life, right? It's not, but I think, is anybody interested in doing that? Basically, like did I explain myself good? Money talks.
I would be interested.
Yeah, because I think Paige was saying that it was an interesting way of actually basically testing the waters. You don't put that much money, and then anyway, it's a bear market. Go ahead, Money talks.
Answer the question specifically to the amount. Again, when you look at budgeting techniques, they will always tell you invest 10% of your income. However, when it comes to cryptocurrencies, a lot of people are from that 10%. So let's say you make $5,000 a month, you would invest 500. But out of that 500, people would choose to invest only a certain percentage into crypto, whether that was 2%, 5%, or 10%. So minimum, if you're investing $500 a month, minimum people would invest. Maximum would invest $50 a month into crypto, which is a 10%. And from there, 2% would be like $5, etc. So it really depends again on your strategy. If you have other investments, or which investment do you see more profitable? The younger generations, like Generation Z and the millennials, they're a little bit more aggressive when it comes to their crypto portfolios, because they have seen, the potential that Bitcoin has generated and the revenues it has generated in the last 15 years. But again, it's all depending on, you know, your retirement age, your income, and how much you're willing to contribute.
Exactly, and it's not only
Thank you.
those generations, by the way. Like I have more money in crypto than in stocks, and I just turned 49 a week ago. So again, because I've been here, be here in the space for 3 years, over 3 years. So it's like, you start noticing what you can do and so it comes with the territory. Any other questions?
Yeah, I have another one, and I apologize if this has already been mentioned. Are there actual brokers out there that can invest for you?
So that depends again on your on your wealth level. There's over the counter. A lot of people don't talk about over the counter exchanges. So yeah, it just, again, when you're letting somebody, it's not like the same as a stock,
Right. Okay.
where there's protections for if the company goes down or whatever, right? Meaning, example, Schwab. You put money in Schwab. There's protection for the people that are putting money in there, right? With crypto, most of the exchanges or places that you put money, they don't have a protection. So you're relinquishing your money to that exchange or whatever, and if that exchange goes down, you lose your money, right? And so I wouldn't recommend you doing that at all, because again, then you have a higher risk of losing your money. Does that make sense?
Yeah. Yeah.
So it doesn't. I mean, it's not. I know it sounds complicated, and maybe that's. Is it because what would be the reason that you want to do that? Is it you don't have the time, or you seems like too
Well,
complicated?
I think the reason would be not first and foremost, maybe not understanding it so well, and having an expert that can be somewhat like a financial advisor, and help you invest in certain cryptocurrencies, and just trusting that their knowledge and experience would be of help.
Oh, okay. That makes sense. Yeah, I mean, I mean, if that's what so you need basically a coach. Well, we do that. So
Actually,
usually
like
we
a
don't,
coach would be like,
basically, we don't, when we're in social media, we don't say go buy this, go buy that. But when when I have clients, I actually talk to them about, hey, this is depending on the risk that you're willing and how much money you're willing to put or whatever. This is some recommendations and stuff like that. The problem with a lot of the financial advisors is they're not really knowledgeable about crypto because this is so new. It's so new. So and there's some that are they're like, oh no, that's too risky. Again, because they don't understand the space, right?
right.
Yeah. So I think that's the so and let me give you an example. I actually lost 20K in the last month because I wanted somebody to trade for me something, right? Um, I got into some MLMs, crypto MLMs, and they end up basically going down. Because again, I got busy. Not that I don't know how to do it, I just got busy, and I knew the risk, and so that's an example of what happens when so you need to be very sure, whoever is trading for you or doing stuff like that. The best thing is to learn how to do it. That's one thing that we stress in the crypto space. Do your own research, learn how to do it, right? Money talks, because that will save you a lot of trouble in the future.
I mean, one of the things that we always iterate in this space, cryptocurrency has not only been, something that like the new asset class that everybody's running to, but it also has been an instrument for people to get better educated when it comes to their own personal financial literacy. And this is something that you will see within the community always reiterate. It's not only about investing in crypto, but it's also about learning how to self manage your own finances and not really depending on a system or on other people to help you manage your money, like a bank or financial advisors. I personally experienced a friend who he inherited almost $1 million, and during that time there was no laws for professional financial advisors to really do good
Cool. Thank you.
by
Okay.
financial advisors. They get paid from your investments. So whether you win or lose, they're still getting paid. You still have to pay for the services.
Mm-hmm.
Um, and if you're losing it all, again, you still have to pay them. There's no agreement where, hey, if I'm losing money, you don't get paid. No, they always have to pay regardless.
Mm-hmm.
And at the end of the day, it's just like if you don't have a good advisor that really has your best intention in mind, you're just transferring your wealth to someone else without even realizing it. So you have
Exactly.
to be
And
very
yep.
mindful about who you trust.
Yeah, I mean, ask your financial advisor if they have a fiduciary how you say, if they actually have a fiduciary, if they're following a fiduciary rule, meaning that
Yep.
your interest is the most important, not theirs. And if they don't want to answer, it's because they don't, and so they're gonna be like basically working for themselves. I don't know if you heard that word, fiduciary.
Yeah.
Um,
Fiduciary. I think it's fiduciary responsibility.
Yeah.
yes, a fiduciary responsibility. If they say, most of the financial advisors, they don't have a fiduciary responsibility to take care of you. It's not your best interest; it's their best interest at heart, not yours. And so they're working for themselves, right? And so again, going back into taking power of managing your money is ultra important, right? In the beginning, you might need somebody to help you, but once you know the basics, then you should take 100%, responsibility for your own money, because you're the one that is going to be more into your money than anybody else, right? Unless they want to take your money, if that makes
Yeah.
sense.
Yeah.
So always remember that. Um, so any other questions?
Just have one short question.
Yeah. No, go ahead.
When I first started getting into crypto, I did a little research and I came across the term HODL, which stands for Hold On for Dear Life, which
Yes.
gave me pause when I first started to invest.
Hmm.
Any thoughts about the market that has that kind of word as part of its details?
So you basically got scared because it said hold on for your dear life, and you're like, oh shoot, what did I get into,
Yeah.
type of thing. Man, we're very passionate in our space. Okay, we're like ultra passionate about crypto and distributed technology. Those of us that are in this, for that. And so we have very, very interesting sayings, you know. Um, the hold on for dear life thing was just supposedly the myth was there was a guy that was just drunk, and instead saying hold on, he said huddle. And so that's supposedly the background of that. But hold on for dear life is basically the long-term investor that gets into crypto, that basically goes like, oh, I'm gonna be holding for at least a year, right? So then it's capital, it's long-term capital gains, not short-term capital gains. So that person has to hold that asset for 12 months or more to be able to deal with that. But it's not that it's like crazy. Now, you can be holding, okay, sample, if you're holding for Bitcoin, okay, great, right? But if you're holding for a crappy cryptocurrency, that cryptocurrency might not be um not be around. So you see what I mean? The importance of knowing. Somebody that comes into the space right now might say, oh, Luna is good. No, Luna is not good. We had a fraud with Luna, right? And they made another Luna. And so you might be holding something that might be going to zero, right? And so again, it's go back to a full circle of do your own research. But no, it's not that you're gonna die, that anything is gonna happen because you're holding for your life. It's just we're just a little bit hyperbolic.
Got it.
Does that make sense?
Yeah.
Right?
Another
Yes.
thing that I would say to that is, you know, having different portfolios. This is something that,
Mm-hmm.
when you're learning to follow the money and smart money, you're gonna learn that, the wealthy, they don't have just one bank account. They don't have just one portfolio account. They have multiple brokers, multiple bank account, multiple um, digital banks, etc. So just learning how to, discern which ones you want for long term and which ones you want for short term, and learning a little bit about the cycles. We all know that there's a 4-year cycle in these markets. Even the real estate market has a cycle where, there's a bubble, it pops, everything drops, and then everything starts picking up again. And just learning a little bit about this by, following Yahoo Finance, Bloomberg Crypto. There's actually Bloomberg now has their own crypto segments and technology segments where they focus on cryptocurrencies. So, learning about these things because they're focusing on a global economy. So you're seeing how crypto is moving not only in the United States, but around the world. And we all know that the US is the one that is having a lot of the regulatory issues, while around the world, other countries are adopting these cryptocurrencies and have already came up with regulatory frameworks, and they're investing into crypto and devs that want to come to their countries to create more crypto projects and platforms and improve their companies, etc. So paying attention to those, also paying attention to not only the social media, but also the professional medias like LinkedIn and seeing what these companies are doing because what they're putting on LinkedIn might not be the same content that you see on Twitter. And again, they're showing different content based on the audience. You have a professional audience that's actually involved in cryptocurrency, and their content is going to be different. This is when where you see a lot of the documents and reports and data being generated. There's also Statica, which they do a lot of global data that focuses on cryptocurrencies and global trends. So when you start paying attention to all of the resources, you know which ones are good for long term and short term, and then you also learn when you should be acquiring these assets and when you shouldn't because again of the price depreciation or appreciation.
Exactly. And again, this is, I mean, we only talk about buying and selling cryptocurrencies. There's other ways to make money in this space, like trading, bots, staking. Um, Again, it's not only cryptocurrencies. We got NFTs. Again, we can be talking about this for forever because there's always some way of making money. Like you're putting money in a liquidity pool. It's an example that you can make money with that too. Creating a node to build, to help sustain a network, miners. So again, it's like we just like barely scratching the surface of this, right? And that's why it's ultra important to keep, um, to be diversified and to keep yourself updated.
Another good point that you brought up with the miners because a lot of people don't know, but there's people that actually are in the space that only you can kind of say buy, sell, and trade miners based on their price appreciation during a bear market versus a bull market. So
Hmm.
there's so many ways that you can be involved in cryptocurrencies if you're new to the space without directly being involved because with the
Hmm.
have like the technology that actually mines the crypto. With the stock market, you have companies like Coinbase, who is a broker, well, a crypto market exchange. You also have um, the miners that are heavily investing in cryptocurrency by mining Bitcoin, which is Marathon, Riot, and these are two of the biggest ones that are also being traded on the New York Stock Exchange. So there's many indirect ways. There's also a lot of the companies now that create gold and silver, they're actually making gold and silver coins or bars with the cryptocurrency designs, which in the future, if the assets appreciate, not only will they appreciate because of the value of gold and silver, but also they can become collectible items as these assets start to be more exclusive because they're not making them no more or whatever the case may be. So there's different alternative ways that you can be involved if you're still unsure about the actual digital asset itself.
Hmm. Exactly. Exactly. Anybody has any other questions? Love questions, by the way. Okay, so nobody seems to have any questions.
So to wrap it up, I just want you guys to again always be mindful of the what asset you're getting into, making sure you do your research, making sure that you always keep security in mind because again in this space there are a lot of scams. Sometimes you're going to see on Twitter anybody that has certain access that has a certain asset, go ahead and put in your link and we'll drop some for free. Be mindful of all these things because, again, not everybody in the space has good intentions. So you always have to be careful with that.
Mm-hmm.
Ensure that whenever you're investing your money, you're putting it in a reputable exchange and then go ahead and put it in a safe wallet. Um, and again, there's a lot of research to be done about the wallets as well. We have covered hot and cold wallets in other segments. So do make sure you go back and listen to other segments as well, because we have covered that. And always stay updated with the latest data and the latest news. Again, one of the ones that I will always reiterate is Bloomberg Crypto because, again, they're focusing on a global economy as opposed to just what the US is doing. And it's very important to keep that in mind because the point of these digital assets is for them to be used globally, focusing on that cross border payment, issuance, remittance, and eliminating a lot of those fees and time in between these payments or remittances getting to where they have to get. So those are some
Yeah,
of
that
the
would that would
to
be
always
another topic, right? Right, Money Talks, the
absolutely.
cross-border payments. That's another thing we can talk about after we go to the next one, which is going to be um, what to do in a bull market, which is going to be very, very exciting. But so also once you buy your crypto, you need to regularly monitor your investments, right? Keep track of it. There's portfolio trackers within Coinbase and other softwares that people use. I use Coin Tracking so that you can then pay your taxes and the word that nobody wants to say, right? The bad word that nobody wants to say. Yeah.
Well, Crypto Rican Queen and Money Talks, thank you very much. Very insightful and informative.
We appreciate that, man. Hope that everything was very, very clear and understanding. We try to do talk, basic, not go with technical things. So I don't know if you guys have been looking at other crypto content, but a lot of people talk a lot of technical stuff, and then there are people are like completely lost. You know,
Yeah, this is very helpful.
definitely, definitely. So,
And
so no, yeah,
we'll
go
see you
ahead.
next time.
Well, thank you so much, everybody, and let's wrap it up. And now we wrap our session of Digital Grace with Minds Enlightened. We end this enlightening chase thanks to Third Academy for the metaverse space, and you, our dear viewers, for joining this space. From Crypto Rican Queen to Money Talks Insights, we journey through the crypto day and nights. Stay tuned and connected. Keep your goals in sight. Until next time, keep your investments right to rights.